I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, December 8th, and we're taking a look at three markets today: corn, soybeans, and live cattle. We've got the March corn contract pulled up here, so let's get things underway. Looking at that, we had a big reversal there at the end of November, maybe some end of the month position squaring and profit taking that's built into additional pressure on that December 1st trade. Since then, we've really been consolidating, forming a little bit of a wedge. This isn't an extensive long-term wedge, but a shorter-term wedge. Nonetheless, we typically look for this to lead to a breakout or a breakdown point. And we do have a USDA report right around the corner, which is very fitting because that could be the fundamental catalyst to give us that next big directional move. Now, who is in charge, the bulls or the bears? Well, if you draw things out going back to the middle of August, you can see that the bulls have been in clear control of the technical landscape. Higher lows, higher highs, higher lows, higher highs continuously for quite some time, but it looks like we're starting to round out. We've so far marked lower highs here, and we're threatening to make lower lows here. We did defend that earlier in the week, but a break and close below this 415, the 413 area could trigger additional long liquidation. Now, does that mean the top is in? Well, not necessarily. We've been writing in our morning express, the Grain Express that we send out every morning to clients, that there's going to be opportunities for traders on both sides here, but the way things are looking right now, I think the bears have a little bit of a better risk-reward advantage here. If we get out above 428, that's where shorts are going to want to take their medicine and move on. But a break and close below 415, I think, opens the door for potential long liquidation towards that psychologically significant $4 handle, which you can see was support here in November, kind of resistance, and support here in October down to 395. So that's what we're looking at for corn. Opportunity, short-term opportunity on both sides, but I think an intermediate term trade, the bears probably have a little bit of an advantage here going forward. Now, what does that mean for soybeans? Well, soybeans, the same type of thing. We've been consistently marking higher highs, higher lows, higher highs, higher lows for several months now. But again, rounding out, and if you squint a little bit, you can see a head and shoulders forming. We've got a shoulder here, a head here, and a shoulder here. Now this our 1140 area is a level we had marked out in our last video that we did. This was a little bit of a breakout point, became support, and is now support again. The more times you test these support levels, the weaker they become. It's often, we often refer it as a wrecking ball on a skyscraper. The more times you hit the building, the weaker it becomes, and eventually it will break down, and we would be looking for a retracement to this breakout point from November 10th. That comes in a little bit closer towards 1120. You've also got some trend line support coming in down there as well. We still think that beans have a good fundamental backdrop, so if we were to continue to drift lower into that support pocket that we've been writing about and we just discussed, we'd be looking at potentially being buyers here in the not too distant future, but I wouldn't want to be overly aggressive to the buy side right here ahead of a USDA report. So that's what we're looking at for soybeans. Wrapping things up with the live cattle market, we've been forming a little bit of a wedge. This one is a little bit longer duration as far as the time frame goes relative to the corn. Corn, you can see here, it's really just a week long, but live cattle has been forming this for the better part of the last couple of months. And we're threatening the bottom side of this, which isn't necessarily good, but we were looking for this, and we had talked about it really for the better part of the last week in our daily reports and interviews with RFD TV, not necessarily for this trend line, but for this gap here to hold from November 23rd. We were talking about wanting to be ready, willing, and able to buy this area, but using the deferred contracts to do so, going out to April and things of that nature. Short term, I think the fundamentals are starting to soften quite a bit, and you could see the February contract back off a little bit more. The optimism around the cash trade has started to fade, and I wouldn't be surprised to see that lead to additional pressure here in the near term. Long term, again, I think you're going to see some value in the deferred months. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures involves substantial risk of loss and is not suitable for all investors. Thanks a lot.